Good morning, everyone. Welcome to the On Time On Target Morning Brief, where you invest with fighter pilot precision on a daily basis. Today, we're going to talk about buying the dip. And I have to give myself a quick high five because yesterday I called it when we talked about Roblox. And there was a headline yesterday about how Cathie Wood had bought the dip in DraftKings the day before. And I said, I bet you there will be a headline tomorrow that Cathie Wood bought the dip in Roblox. And guess what I wake up to this morning? That exact headline. I figured it was coming, and that's exactly what she would do. I also listened to about a half an hour interview with her yesterday. It's a couple weeks old. But her talking about the philosophy of a lot of her investing is very similar to mine in the fact that it's really tech heavy because of the high margins, that sort of thing. She phrases it through innovation and talks about how innovation can survive and continue to thrive no matter what the overall market is doing. So I think that is I was kind of taking notes on the words she was using because she puts it in, better English than I have up to date. So I'm going to start stealing some of her words as far as how I describe our particular investment philosophy, because that's exactly what I'm trying to do too, is capture that high margin, innovative, change the world type companies, buy them early and hold them through the dips and the valleys and the peaks, that sort of thing, and buying more when they sell off. So that's what we're going to talk about, is buying the dip and in stocks when they get hit. We've done that in Apple. We did it in Amazon. If you remember last March when the overall market was selling off, Amazon dropped over 50% down to $1,500 a share, and bought as much as we could, right? And we've been rewarded handsomely for that. So that's what we're going to talk about, is buying the dip. That's our question of the day as well. Is you often hear BTFD. Obviously, that's a little bit of slang thrown in there, but we'll see what Investopedia has to say. As far as our longs, there are some longs out there, but the market overall is it's in the red this morning based off the Fed announcement from yesterday. I don't think the Fed announcement yesterday was nearly as bad as all the crying on CNBC about, oh, woe is me, but we'll talk a little bit about that as well once we get open here. But I do like Ride Short. That's Lordstown Motor. If you want to take a look at RIDE, that's my favorite of everything I have proposed for you today. And it'll be kind of a quick meeting today. After the open, I'm going to close pretty quickly, so we'll be out of here a little bit early today. If you're catching us on replay, please subscribe and hit the notifications bell. If you want to join us live, which you don't see as a Q&A window and a chat window above me for people to ask questions. And with that, let's go ahead and get started. All right, welcome back, everybody. Here is the lineup card for the day. Make sure you have your Q&A window set up correctly and your chat window set up with all attendees selected so we can all hear your inputs. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence for acting upon anything you hear this morning. Full disclaimer information is available at ototnow.com. All right, today we're talking about here today on Thursday, June 17th, talking about growing our money, protect our money, living off our money, really looking for alpha, if you will. So if you've heard that term, seeking alpha, that's where you try to outperform the market. Well, what you want to do to outperform the market is, if you get a significant dip in a name that you like, that you think has, the long-term thesis has not changed, then that is a buying opportunity. That is when the stock is on sale. So that's what Cathie Wood is doing. That's what we've done in the past. I bought some more Roblox yesterday, not as much as I wish I had, but went through each account and mostly added into accounts for folks that didn't have it. Again, if you're in retirement, it's really not the right company for you. But certainly, if you're trying to, in that growth capital appreciation phase, it's good to have a chunk of Roblox. Same with DraftKings, right? It's pretty speculative, kind of high risk, great thesis for both, but certainly trying to buy more when things go on sale. Another thing while I'm looking at it, June 17th, June 19th is coming up. Obviously, if you've been watching the news, we saw that both sides of Congress voted in June 19th becoming a national holiday, so to mark the end of slavery. So that's expected to be signed by President Biden sometime today. So that'll make another official holiday we have on June 19th every year. All right. For our flow today, long, short, open, short, long, we're going to do market review, headline review, look at long-term investments. We'll pull the chart mostly from DraftKings because that already reflects the bounce that we had on the day prior, yesterday, excuse me, 2 days now, where Cathie Wood bought the dip, and so did a lot of other people. We'll take a look at that chart. We'll also look at roadblocks and kind of make a projection on where that chart's going as well. We'll get into the short-term execution, which I'll show you that chart here in a second, and execute the market open. Contingencies and economic resources are standard. All right, let's take a look at ThinkPipe's TDA's platform here. We've got 4 screens. Again, SPY is, you can see the markets actually may make it to the green by the time we open. We'll talk a little about the Fed here in a second. Again, STSA is a long, but it's already kind of starting to fail. These are pharmaceuticals. They're really, there's dart throwing, which we don't want to do, and then there's one level above dart throwing. That's where you are when you try to trade pharmaceuticals. The only thing you do know is that they're going to move because they do that significantly. Several headlines are out. If you saw CureVac, I think is down 50%. Their COVID basically vaccine failed. So a lot of other things are bumping up off of the fact that a major player is striking out, if you will. Also have phase, PHAS, and then there's the third one, VKTX, which I didn't like the chart on, so I went with phase. Nothing more than just the chart. The one I do like is RIDE. I've shown you the 15-day chart here. It's got a pretty good storyline behind it on Tuesday. So we go 2 days ago, they announced they had purchase orders, blah, 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 for it's an EV company. I believe it's foreign. They had purchase orders guaranteed, something like that. When they started walking that back this morning, the CEO did. So that's where you see the stock starting to fall. So pretty good storyline to short in RIDE, and that's why you see that longer term chart here. All right, zooming out to where we normally look at is a little bit of red day yesterday, right? So here was the Fed. They came in, and 2 o'clock Eastern on Wednesdays every 6 weeks, we have the Fed meeting announcement after they meet for 2 days. The published Fed meeting minutes did not change much. Half an hour after that, at 2:30 Eastern, is when Chairman Powell takes the mic. And some of the things he said was what moved the markets after that and made us have a red day. The big picture stuff there is the media is making more out of his words than what he said. He acknowledged inflation. He still says it's transitory, but it's more than they thought it would be. Whoop-de-doo. And he also made comments about potential interest rate hikes in 2023 instead of 2024. Well, I remember him saying 2023, so I must have missed the 24 number. But yeah, I don't view. Yeah, they literally, mark my words, write it on your calendar right now and save it. They're not going to be able to raise rates by then. There's literally no way. You have to stop the quantitative easing, which is all the bond buying we talked about yesterday. That's going to take over a year to do that alone, and they aren't even talking about starting walking that back. And that's your taper tantrum. So you have to survive the taper tantrum to be able to raise rates. And we're not going to survive the taper tantrum. Everybody's going to freak out, right? When they stop the bond buying program. So that's my call on it. I don't think rates are going to be going anywhere, but you see the big sell-off here in the afternoon there at 2:30. All right, we'll look at headlines real quick. Started late, so running out of time a little bit. But here you go for the futures. We won't go around the world today, but there's where we are with the futures, seeing if we're going to make it to the green yet. Not quite, but we'll go through the the headlines here. Stock investors should keep riding the rally. Yeah, the Fed be making a mistake. Well, they can't, like I said, they can't do what they say they're going to do. I mean, you do have to stop the bond buying first, which is propping up the bond market, before you can even consider raising interest rates. David Tepper, you can see at the top here. Stock market's still fine. Yeah, I think the economy explodes open. I did hear Cathie Wood talk about something that was interesting. It's called panic buying. So and that's what's kind of causing that short-term transitory inflation, is because, like lumber, people were panic buying lumber because you couldn't get your hands on it. So that sort of mentality is companies out there, like with chips, there's a shortage. So what are people doing? The entire purchasing arm of several companies are out there trying to buy as much as possible. I went to lunch yesterday with an individual that's, charged with solving problems with a major tech firm. And he's just like, yeah, we're buying up all kinds of solutions out there. So that obviously causes, it increases the problem. So there will be a hangover with that, where, lumber prices have already started to come in. Chip shortage won't last forever. It's transitory. And maybe even the housing market comes back in. I don't think it'll come back in a lot, but it'll come back in some. But overall, the market's fine based off of what the Fed said yesterday. Here's your headline that I called. Cathie Wood adds roadblocks during the drop. Continuing trend of buying stocks on big dips. Yes. And that's what you should do too. That's what I'm doing for you if you have your accounts with me. All right. Let me add these into the room real quick again as we get set up for the open here. There we go. All right. Let's see. There's David Tepper. There's a picture of him. Moves up its timeline from 24 to 23. Not that big of a deal. There's Cathie Wood, picture of her, if you didn't know what she looked like. All right. This is true. Cost of living adjustments for 22 is going to be higher. It says it could be. It's going to be. Again, this affects Social Security as well as anyone on a military retirement. I do expect it's probably at least 4% this year. So it'll be interesting. All right, let's move over to the Think Pipes and get set up for the market open. I'll be right back with you. Good morning, everyone. Welcome to the on-time, on-target play of the day. We have 5 seconds to the market open. You see 4 screens here. They're all 1-minute charts, except for the last one. There's our open. So you can see we're barely open in the red, but there's some strength going into the open here. We have 2 longs. One's up 13%. It's a it's a pharmaceutical company. We have another one that's basically was a long, but it's kind of failing. And then we have our short, which I like. So this is, we're going to get out of the 10-day chart here. We're going to go down to the 1-day chart. Clicky, clicky, come on. All right, what we have, I like this entry point. We have some backing up. We have some profit taking. 1033 is the high of the day. So the entry, we'll call it 1020 here. Oh, that's aggressive. I don't know if I can quite do that. Let's go with 1015 and 1025 as the entry points. We're not quite covering the high of the day, but I just I don't want to take it too early and get bounced out of the top here. So right now I'm doing 1015 short with a 10 cent stop. I actually like it better now. Let's go 1020 and 1030 as our numbers. 1020 with a 1030 upper stop. I like this. I'll move it up to 1023 if I can, if it kind of stays in that range a little bit. Okay, I like it. Approaching minute 3, 1023. Well, where are we at? 1023. We're going to 1023. Okay, new numbers. Those numbers are off. We got a new high of the day up here. So we'd want to be 1040 and 1030. Can't quite do that. We'll do 1025 and 1035. If it powers higher, well, okay, those numbers are off too. Still looking at 1030 here. 1030 to 1045 for this short. It's all short covering that we're seeing right now. That'd be a 15-cent stop if this holds here. 1030 up to 1045. Nope, this thing's just going to power higher. There must be a big buyer. All right, let's use, this is aggressive, 1040 and 1055, 15-cent stop. 1040 is your entry point short. 1040 is your entry point short. There it hit. I saw it touch it, so get into the trade there. 1055 is the upper bound, so make sure you get that in real quick. Never mind me flopping all over the place here. I'm trying to get that in well. There we go. That's what I'm looking for. 1040 you're in, 1055 is your upper stop. So that's marked here. And again, here's your arrow short. You still have time to take this trade here at the 1040 range. Again, 15-cent stop. So what does that put our math to? 1025 is the first R, 1015 is the second R, 1010. And then 995, where it was not too long ago, is your exit point. So overall, really like the entry on this trade. Get it zoomed in here, makes my arrows look dumb, but that's all right. There we go. You can still take it here. Again, we've covered the high of the day. We just have to see if it holds. If this holds, I'm going to like this trade because this thing's going to strike down. So let's zoom in a little more here. So again, 1055 though, get that stop in just in case. All right, we've got that. I'm going to look at see how the market's doing on another screen real quick. All right, almost even across the board. You can kind of see over here that's powering higher. Actually, this is showing the S&P is actually in the green. So yeah, I think people are going to kind of shake off yesterday, and the market's going to continue its trend higher. All right, STSA would have worked long. Goodness, look at that, up 15%. Phase really not working too much. We'll try the VKTX. There, the VKTX, that failed, so there's no way. All right, we're out of our trade. No bueno. 1055 busted that. So again, just eat the R loss, and I would. It'd be aggressive to re-enter this, but again, this does have short. Certainly looks like it's going to end up short, but we got bounced out the top of it, so call it a day there. All right, let's take a look around the world as what's going on in the bigger picture. Let's see, TQLB is a spec name up 5%. Nikola in the news up 4%. Clover Health, that's a meme stock. Wynn Casino. Casino's been selling off, so it's good to see that moving back higher. VLDR, that's some LiDAR, light detection and ranging for the electric vehicles out there. NEO, I'll pull that chart. NEO's kind of been doing well lately. Not Bio, NEO. So there you go. You can see NEO was up at 47 a few days ago, sold off to 44, and now is powering higher. If you back this chart out a little bit, you can see longer term, yeah, was down at below 40 2 weeks ago, and doing just fine now. So things are looking good for NEO. AMD, Disney, Delta Airlines. So some names that are going higher. Let's check out the red side. Trade Desk 89. Okay, so when you see this. Trade Desk down 90%. What does that tell you? Yeah, that tells you there's a split involved. The stock is not down 90%. That would be a headline. So let's look at the Trade Desk stock. So it was up at 600. Now the stock dove down to $59, right? So that is quick math, 10-to-1 split. So there you go. Right there at the bottom of the chart. Now, what they haven't done is they have to go back and reprogram all this, right? So when you see a split like this, they can't do everything instantly all the time, right? So what happens is somebody will be tasked with dividing all of these numbers by 10 and completely redoing this chart. So when you back out tomorrow at a 1-year chart, all of this will be adjusted, okay, to the new numbers. So you don't have to worry. Your trade desk stock is not down 90%. If it was, we would be buying. It's like hang up the phone, get off the call. We are buying Trade Desk if it was really down 90%. If you're not familiar, Trade Desk is a advertising firm that is expanding worldwide, one of the best out there. So that's interesting. I didn't catch that they were splitting though. May have to look at buying more now. To take a little note to myself. All right. Clickstream down. It's been selling off lately. Winners is down. These are all pretty speculative names. Gold and silver got hit yesterday, which makes no sense, right? We're going to have inflation and we're going to raise interest rates, and gold and silver sell off like 2% overnight. That makes no sense. I'm still adding that to portfolios more of as a hedge. So you'll see a little bit of it show up there. All right. That is it. Let's check back. Yep. Market's going higher. Yeah, the trade, no, it's still powering higher. It's almost back to even there for Lordstown. All right, giving up on that. Let's come back to close out with the buy the dips definition. What is buy the dips? Well, I guess that's correct English, but purchasing an asset after it has dropped in price. Generally, you're looking for a sensationalized headline that moves it down. So with DraftKings, it was the short report. With Roblox, it was an announcement that their daily active users, get this number, daily active users dropped to 43 million. 43 million daily active users. It dropped from 43.3 million daily active users. So I guess if you subtract that out, right, that's 300,000 less. But I mean, come on, man, that's an amazing amount of daily users, right? So anyhow, so it's you have to look at the headline and is it sensationalized or has something changed? Obviously, when Luckin Coffee was at 50 and it started dropping due to fraud allegations, that's not a buy the dip opportunity. It went all the way to $1. Okay. When you look at, Lordstown, yeah, a little, maybe they're walking back some stuff they said, not huge, but that short report on DraftKings, one of the best, arguably the best, or one of two best plays, for the nationalization of sports gambling, the DraftKings and Penn Gaming. And I think DraftKings is way better. It's kind of crazy, right? So the good buying opportunity. So anyhow, that's all the buy the dip I'm going to talk into today. Precious metals, yeah, I hadn't seen that apex, but it could happen, certainly, if they change the supply there. All right, so with that, I'm gonna let you guys go for today. We will see you back tomorrow. Have a good one. Bye.